Hi everyone, this is Rusmin from Fifth Persons. At Fifth Person, we invest in great businesses, be it for dividends or capital gain. Okay, so my job here is to help retail investors to do the same so that they can grow their wealth safely and consistently over the time. Okay, so in this episode, I'm going to answer another 3 more questions about stock investing that are often being asked by retail investors. Okay, so the first question that I have here is from one of our customers, and he asked that I do not know how and what to analyze first, because every time I analyze an idea halfway, I have to throw them away, and because they've actually failed his criteria. Okay, so and it's quite frustrating. And is there a way to handle this issue? Over the years, I have actually learned to be a lot more selective when it comes to which company that I want to analyze deeper, because I don't want to spend so much time analyzing a company. At the end of the day, I couldn't capitalize on them. Okay, so how I go about trying to be more selective is, of course, first I will only look at some of the companies that have businesses that I think that is going to be resilient, okay, in good time or bad time. Okay, and how do I ascertain that? Is very simple. I just look at their past financial track record, like in the 0809, in the peak of 2007, how were they performing back then. Okay, so if they were able to maintain the record at that point of time, the chances are high that the next crisis come, they will be able to prepare themselves better. Okay, so there are a few resources that you can use. One way you can actually use Morningstar, which is actually free resources. You can actually key in the company name there, and then you look at their past 10 years track record and see how the company is actually growing. Okay, so if the company passes the criteria, then of course that is actually a company that I may want to consider to go deeper. Okay? Another way that you can do, of course, you can actually leverage on other people's research work. Okay, so one way that I'll usually do is, of course, I look at some of the analyst report. Okay, when they do initiation report, okay, so these are the report where it's going to be 30 pages long about a specific company, and you can actually leverage and read on those research reports that's already done by the analysts. Okay, so because they already help you to piece those information together, and it's actually quite useful, and all you need to do is just to read through them, and that shouldn't probably take at least maybe an hour or less, okay, for you to understand the company. Okay, and of course the second questions that I have for this video is that the question come from another investors. Okay, and he asked that my biggest challenge is actually monitoring investments on an ongoing basis, and most of the time sometimes we are too busy with work, family, and may miss out buying or selling opportunity. Okay, so is there a way to overcome this challenge? Okay, so how I approach this and solve this issue is, of course, I only invest for businesses that I think that is resilient. Okay, so this is a businesses that will definitely continue to do well, be it good time or bad time. Okay, so regardless of macro environment, any changes on that. Okay, so be it trade war, rise of interest rate, I want those companies that invested will continue to do well regardless of this macro environment. Okay, so and this is one of the most important criteria that I set for myself, and you may want to actually duplicate the same thing. Okay, so only invest in those businesses that are very resilient and they have a long-term prospect to grow the earnings over the years. Okay, so that's how I deal with this when it comes to buying a company in my portfolio. Okay, so of course, if you're busy, again, you wouldn't want to spend your time looking at the share prices on a daily basis. Okay, so how you can do it, of course, that's my suggestion is going to be maybe you look for those stock brokers that have features like which you can set a price alert. Okay, so you need to find brokers. Some of those brokers actually have this feature where you can set price alert and of any company that you're interested in. Okay, so if the price of the company hit the price parameter that you set, they will send you a notification. Okay, so that will let you know that you can actually look at this stock because the company has hit the share price that you want to buy. Okay, so there's one feature that you can look for. Another features that you can do if you don't even want to bother to log in. Okay, after you finish your research, okay, you definitely have a price in mind that you want to buy this company at the end of the day. Okay, so have that price and then go to your brokers, and usually most brokers have this feature called good still cancelled or GTC order. Okay, so meaning to say that you can actually look at any companies, and then you find a company, you set the price that you want to buy and the number of shares that you want to buy. Based on the amount that you allocated, you can actually key in that order, and when the day when it comes, the price hit the price that you actually set in the GTC order, it will actually auto execute for you. Okay, so I hope I answered that question. And the third question is regarding portfolio. Okay, so now this question is how do you usually adjust the portfolio? Okay, and I have these 20 stocks in my portfolio, and some of them are losing money. And what are the criteria to add more on the existing stock or bump up the counters, or maybe perhaps selling them? Okay, so of course this is really about your portfolio, the number of stock that you have, which is about 20. And personally, if I have that 20 stock in my portfolio, and if I'm reviewing them, okay, I will go through one by one and ask myself whether the company that I bought in a portfolio, are the thesis still valid today? Okay, when I bought it maybe 2 years ago or 5 years ago. Okay, you might want to ask yourself this question: are the thesis still valid for this company? Okay, if it's not, then you may want to sell it. Okay, so of course, and then the question is, when should you decide to add? Okay, so now deciding to add a position, I mean, I'll rather or add more money into that existing position, you need to make sure that your stock and the percentage allocation in the portfolio does not contribute in a significant percentage in the overall portfolio. Okay, so you wouldn't want to add into a stock that maybe you already have 20% position in your overall portfolio. Okay, because over concentration may lead to disaster. Okay, so I typically believe in like diversifying into at least 8 to 15 stocks minimum. I will say comfortably 10 companies. Okay, so if each company you have equal percentage allocation. Okay, so again, before you bump up, you make sure the companies that you are trying to review still passes your own criteria. If the prices may be a lot higher than you first purchased, that's fine, because the business over the years, they may grow their intrinsic value. Okay, so you have to go back and calculate your intrinsic value again. You cannot anchor based on the price that you bought previously. You need to recalculate what is the value of the company today. Okay, so if it is still attractive to you, of course you can actually add up your term of percentage in your portfolio. Okay, if you didn't buy enough for that stock. Okay, so that's all I have for you in this video. And if you enjoy yourself, or you know anyone who actually might benefit from this video, please feel free to share it with them. Okay, so of course, if you have any question about stock investing, please let us know and type in the comment box. Okay, you'll never know that we're going to pick your question and do it in the next video. Okay, so once again, this is Rusmin from Fifth Person, and I'll talk to you soon.